Well, good afternoon, everyone. Thank you so much for joining our program on the Paycheck Protection Program loan forgiveness. As I'm sure everyone understands, the details are changing rapidly, so we're happy to be able to do this today and have our speakers. My name is Carrie Burns. I'm with the Cleveland Metropolitan Bar Association. A little bit of housekeeping. We'll take some general questions. The speakers would like to shy away from very specific questions, but if you have general questions about the program, you can type them into the Q&A feature at the bottom of your screen or the chat function, and we will pick those up. Our speakers today are Alan Scheufler. He's a business, finance, and real estate attorney with more than 36 years experience. He's the co-chair of Ulmer and Berne's Banking and Commercial Finance Group. Alan's finance experience includes a broad array of commercial and industrial loans, asset-based loans, private equity fund financing, commercial real estate acquisition and construction loans, real estate development loans, historic tax credit financing, new market tax credit financing, tax increment financing, loans to high net worth individuals and family offices, and loans to professional firms. He represents major financial institutions, community banks, investment funds, as well as borrowers and developers in structuring and documenting loans for commercial, real estate, asset-based, and cash flow loans. Alan also regularly counsels owners of closely held and middle market business and developers who need to maximize the value of their investments, grow, create jobs, and improve profits. Next, after Alan, it will be Mark Sarlson. He's a shareholder with, and I apologize for the helicopter going overhead right now. Mark is a shareholder with Retzel and Andrus and focuses his commercial finance practice on the representation of financial institutions and publicly and privately held corporations and lending transactions. For the past 27 years, he has represented certified development companies, financial institutions, and borrowers in connection with government guaranteed loan programs, including the U.S. Small Business Administration 504 and 7A programs. He also has significant experience in handling loan structuring, documentation, negotiation, and workouts for financial institutions and borrowers in asset-based, mezzanine, syndicated, commercial, mortgage-backed securities, and construction lending transactions. And then finally, we'll hear from Ray Graves. He's the lead lender relations specialist for the SBA Cleveland District. He's been at the district for the last 6 years, but has spent his entire career in SBA-related jobs, starting in 1997. And he's a graduate of The Ohio State University and Tufts University. So Alan, I'm going to kick it over to you to get us started.
Thank you, Carrie. I appreciate this. We are going to try and do a webinar here from kind of a 10,000 foot level so that we presume that you have at least some familiarity with the PPP program, the Paycheck Protection Program, and then we'll try and move through that from several different perspectives. I'm going to present it more from the borrower side. Mark Sarlson and Mark and I go way back. We've both been practicing in the same space for many, many years together. Both on similar deals and simply similar types of clients. And he's going to talk about this from the lender's side, because if you have an idea of what the lender is expecting, you have a better idea of what the borrower should be providing. And then Ray Graves is going to speak from some perspective from the SBA with regard to this program. And so I'm going to try and share a screen here to get through my part of the presentation. Okay. Again, we're presuming that you have some familiarity with the PPP program, which came out under the CARES Act, which was signed on March the 27th. And why is a PPP important? Because it's partially or fully forgivable depending on whether or not you meet the right criteria for the loan. And so if you do meet that forgivable criteria, your loan is basically a grant because it is forgiven. But Congress also took into account the fact that when a loan is forgiven, normally that's taxable income. And so the Congress did decide in the CARES Act when they described the PPP that if a loan is forgiven, or to the extent it is forgiven, it is not going to be taxable income to the borrower. The loan bears interest at 1% interest on the portion that is not forgivable. based upon the Flexibility Act, which became law on June the 5th. You have up to 5 years to repay that loan on the unforgiven portion. And then if you had a loan outstanding before June 5th, you only have 2 years to repay. But if both the borrower and lender agree, you can extend that to 5-year repayment also. The Flexibility Act also said that you can defer your payment on the loan until the loan forgiveness process works its way through. So in other words, once the SBA says, yes, your loan is forgiven or partially forgiven, and gives that money to the lender that to forgive your loan with, at that point in time, on the unforgiven portion, you have to start paying principal and interest. But if your loan is fully forgiven, then it all goes away. Also, you have no personal guarantees on the loan, there's no collateral, and you can prepay the loan at any time. One of the most important parts of the application process, which made this program available to many borrowers that otherwise could not participate in the SBA program, is that a borrower does not have to prove that credit is not available elsewhere. That's normally a requirement for most SBA loans. You should know that with the passage of the Flexibility Act on June 5th, there's a new loan application form that's available. So if you have not previously applied for a PPP loan, you need to use that new form. Just as a quick overview, what's the maximum amount of the loan? Either $10 million or, if less, 2.5 times the average monthly payroll cost for your business. And that determines the total amount of your PPP loan. Now, once you make that application and once you do the calculation for that, simply take that information, that documentation, set it aside, hold on to it forever, because you're going to need that in case you need to go through a PPP audit, but otherwise you're not going to use those numbers again. Then we get into the fun part. This is where I had to spend, and the other attorneys on my team had to spend 90% of our time with our borrowers during the first 4 to 6 weeks of the PPP program. And that is determining if a business is even eligible for a PPP loan. A business that has 500 employees or less is eligible for the PPP. Or if your business has an SBA NAICS code that has a larger employee count, then as long as you're under that larger employee count, then you can qualify. To give an example, I know that commercial bakeries can have up to 1,000 employees and still qualify as a small business under the SBA and for the PPP. When you make that measurement, you need to make sure that you include every single employee, part-time, full-time, or any other classification when you make that employee count for this eligibility upfront test. The exceptions to that 500 employee test are for businesses that have an NAICS code starting with 72. That's usually the food service industry, hospitality industry, and related industries, or franchises such as McDonald's, Subway, or any other previously recognized franchise under the under the SBA codes, as well as any business that has receiving a financial assistance from an SBIC, a Small Business Investment Corporation. That's a very specialized area. In those exception areas, you can have up to 500 employees per location. This is how the Shake Shacks of the world and the Ruth's Chris Steakhouse were probably likely able to qualify for a PPP loan. If you can't meet the employee count test, you have an alternative size test. And we had many clients that attempted to fall under and qualify under the alternative size test, which is you have to have $15 million or less in tangible net worth and $5 million average net income or less over the prior 2 calendar years or fiscal years. And so you may not have been able to meet the employee count test, but you may have been able to meet the alternative size test. But here comes the real problem. Both of those sets of tests have to apply the affiliation rules under the SBA regulations. And the one regulation you need to pay specific attention to is at 13 CFR 121.301 subpart F. And you have to make sure you're using the pre-March 12, 2020 version. This is a test of actual control. So if there is 50%, or more than 50% ownership in any one person or any one entity, even if they don't exercise control, that's deemed to be control. And therefore, if there is control, then your business is aggregated with other businesses owned by that person or entity that owns control of your business in determining whether or not you meet your 500 employee count. The same problem can actually occur with minority ownership if they have a negative control rights over certain day-to-day operational issues. In other words, we had a client that had a 13.5% owner, a PE firm that only owned 13.5%, but they had a few, 5 small negative control rights in the operating agreement. And if those rights are irrevocably relinquished by that PE firm before the date you apply for the loan, then you can probably qualify for the loan without counting the other businesses owned by that minority shareholder. But if you don't allow that, or if you don't have that relinquishment, then you have to count their businesses in yours to determine if you meet the 500 employee test. That also includes foreign entities and foreign affiliates. So if you have another affiliate overseas, or if a holding company is overseas, you have to include the employees of that foreign affiliate in determining your 500 employee count. Also, this rule applies, the SBA and Treasury made it clear, this rule applies to PE firms and hedge funds. So this is an area where we spent much time. If you have any issues on this, make sure you keep all your records so that if there's an audit, you can prove that you properly met the eligibility test, that you included all affiliates that you needed to include. And if you didn't qualify, you may need to turn into or take alternative measures now to try and address those problems. Okay, prior to the Flexibility Act, we knew that you could use the PPP loan for the following reasons. You had to use at least 75% for payroll costs and no more than 25% for eligible non-payroll costs. As of June 5, with the Flexibility Act, they relaxed that rule, Congress relaxed that rule so that you can use at least 60% for payroll costs and no more than 40% for eligible non-payroll costs. So what's an eligible cost? For payroll, it is cash compensation up to $100,000 per employee. So any employee under $100,000 you include in full as far as annual compensation on a prorated basis. And then for any employee over $100,000, you cap them out at 100, and then you work from that cash compensation and go forward from there. In addition, you can include the employer's share of health insurance premiums, retirement contributions, and state and local taxes. You can, we learned from the loan forgiveness application, you can include bonuses and hazard pay for those employees under $100,000 compensation. The non-payroll costs are payment of interest portion of your mortgage obligations if they were in effect on February 15th. And that includes both real estate and personal property. So that was something we learned new in the loan forgiveness application. By the same token, we also learned that rent under lease agreements also included real property and personal property, so long as the lease agreement was in effect on February 15th. Likewise, on utilities. Eligible utilities, if they were in service on February 15th, include electricity, gas, water, transportation, telephone, or internet costs. Then you have to measure what time period you're going to measure this by. And prior to the Flexibility Act, you had 8 weeks or 56 days beginning on the day the loan was first received to determine if you've used all of your PPP loan monies for the permissible purposes. The covered period then was expanded under the Flexibility Act to 24 weeks. So that gives all those businesses, in particular the restaurants and movie theaters and hotels and other hospitality operations that were shut down during the stay-at-home orders from the various states. This gives them a lot more flexibility between the 60% limitation on payroll cost and now the 24 weeks within which to spend it. It gives a lot more flexibility to actually meet those tests. If, however, an existing borrower, as of June 5, elects to do so, they can keep the 8-week covered period if they can actually meet the tests for the loan forgiveness. Now, here's another area we spent many weeks on with much consternation for our customers. The week that the world learned that a whole bunch of public corporations receive PPP loans, the Treasury Department and the SBA came out and said, look back at your loan application. Remember those certifications on the second page of the loan application? You said in good faith that you certified that the current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant. And we all took a look at that and said, well, yes. And then the Treasury Department in FAQs 31 and 37 and 39 said, well, you need to measure that necessity certification by taking into account your current business activity and ability to access other sources of liquidity sufficient to support the ongoing operations in a manner that is not significantly detrimental to the business. Now, in both the certification and in the guidance from the FAQs, none of those terms were defined. So every business had to go out and try and determine whether or not they could, in good faith, make that necessity certification at the time they made the application. And then finally, the Treasury came out with FAQ 46 that said, well, for businesses that received a PPP loan of under $2 million, we're going to deem that they were able to make the necessity certification without going through all the proof of that. But every other business that has received a PPP loan of $2 million or more, we're going to not only examine that, but we're going to audit every single one of those larger loans over $2 million. So now let's turn, now that we know a little bit about the PPP loan, let's turn to the loan forgiveness aspect. You need to turn to, when you get a chance, the SBA Form 3508. Now, we only have at this moment available the original Form 3508, the application form. It's an 11-page form. It has not only the application form itself, but also a Schedule A and a worksheet. You need to very, very carefully review the entire form, all the instructions and the Schedule A and worksheet. And I actually recommend you review that twice before you even attempt to fill it out. And then as you go through this process, you need to assemble all the information and the materials and the documentation so that you can complete it. Many businesses are involving their CFOs, CEOs, HR directors, and their outside accountants and attorneys to help get through this form because it's not simple. It takes real application time and thinking time to get through it correctly. And we learned in the loan forgiveness application that you need to keep these records for 6 years after the later of the date your loan is forgiven or the date the loan is repaid. So if you're on a 5-year repayment schedule, you're going to be keeping these records for at least 11 years so that you can show, if you're ever audited, that you were entitled to the loan, that you used it for the right purposes, and that your loan is forgivable. So we learned again that under the utilization period, you have to be able to use your PPP loan within your covered period. Originally, that was the 8-week or 56-day period. We now know that that will be expanded up to 24 weeks if you need that. We also learned that there was an alternative payroll covered period. So this is in the original application. We don't know if this will be preserved in the subsequent revised application, but if you had a payroll that is biweekly or more frequent, you could actually begin your 8-week period on the payroll that next occurred after you received the loan, as opposed to on the day that you did receive the loan. Payroll costs. We now know that we can use 60%, it was previously 75%, to pay payroll costs. And we learned in the loan forgiveness application that those expenses must be paid or incurred during your 8-week or 24-week period. That means that if you were paying a payroll a few days after you received the loan money, and that was for periods before your 8 weeks began, but you paid it during your 8 weeks, then that gets to be covered. Likewise, we know that under this loan application or loan forgiveness application, that an employee's wages are deemed to be incurred on the day they were earned. So if you have a few days at the end of your 8-week period or 24-week period where they actually earned wages but weren't paid for that, that amount that was incurred can be paid at the next regular payroll period, even though it occurs just outside your covered period of 8 weeks or 24 weeks. Okay, owner employees for lawyers on the phone here or accountants on the phone, owner employees or self-employed or Schedule Cs or general partners, we're treated slightly differently. And your pay is limited on the loan forgiveness form to 8/52 of the 2019 compensation, or $15,000, $385. Hopefully with the 24-week the forgiveness period that is now eligible under the Flexibility Act, that will be 24/52s of the 2019 compensation. But until we see that form, we just don't know. Likewise, owner employees get treated slightly differently, and each of these people are treated in a different area of the form than your regular line employees. And so we need to try and make sure that you understand that form as you go through it and plug these into the right place on the form, as opposed to under the general employees. People who are W-2 employees, like of a sub-S or a C corporation, you can include their employer-paid retirement and healthcare contributions. But for Schedule C and general partners who are on a K-1 or self-employed people, you don't get to include those employer-paid retirement and healthcare contributions because they're already included in the determination of net income on your Schedule C or your K-1. Non-payroll costs. We now know that under the Flexibility Act, no more than 40% can be used for non-payroll costs. Again, they must be paid or incurred during the 8-week period, and you cannot make prepayments of those expenses. So it's important to know that, for instance, if you get to your end of your 8 weeks and you're in the middle of June, you can't pay July's rent in advance under this rule. You have to be able to pay only those payments that came due during your 8-week period, or were paid during your 8-week period, or incurred during your 8-week period. And now we come to the fun part. Under the CARES Act and under the Paycheck Protection Act, if you had a decrease in FTEs during the period between February 15th and June 30, you will also have a reduction in the amount of your loan that is forgivable. And that reduction is based upon a formula. Now, they want you to calculate your FTEs. And this you have to use their 2 optional formulas that are shown in the loan forgiveness application to determine your FTEs. This FTE count is not your normal FTE count. So don't let your HR director try and use their normal calculation. You must use this specific calculation and test both. I recommend testing both alternate forms of the calculation under the form, so you can see which one works best for you. You measure what your employees are at the time of your application against one of 2 alternate periods, either the period of average FTEs between January 1st of 2020 and February 29th of 2020, or go back a year to the period of February 15th of 19 through June 30 of 19. And then there's a slightly different measurement period if you have seasonal employers. If your FTEs during your 8 weeks does not meet or exceed the number of FTEs you had on February 15th, then not all of your loan will be forgiven. However, if by June 30, you recall enough employees that you meet the same FTE number that you had on February 15th, then there's no reduction in loan forgiveness, and you move on to your next part of the calculation. On the FTE count, there's a couple of FTEs that are not included, employees that are not included. If you tried to recall employees and they refused, and you made your offer in writing, and you offered in your written offer of recall the same hours and same wages, and that employee refuses, if you document that and report that employee to the Unemployment Bureau within 30 days, then you don't have to include that employee in the count either on February 15th or on June 30. Likewise, if an employee is terminated for cause or voluntarily resigns or a voluntary requested reduction in hours, that particular employee is also not included in the FTE count. So you have a safe harbor on June 30 if you make it through these calculations. Likewise, if there was a decrease in wages during this period of time of uncertainty, and those employees were making less than $100,000, and you reduce their wages by 25% or more, then there's going to be a similar reduction in your payroll forgiveness. But if by June 30, you restore their wage rates to at least 75% of what they were before February 15th, then you will not have a reduction for that purpose. Now let's finally get to the loan forgiveness procedure. You do this on the loan forgiveness application form with your lender that you got the loan from, or the lender that's servicing your loan. Please gather your loan documentation now, your calculation materials now, your loan forgiveness applications now, loan forgiveness application materials now, while it's still fresh, so that you can keep those again for the next 66 years. Once you make the application, the lender has 60 days to make a determination on loan forgiveness, and then the SBA has an additional 90 days to review loan forgiveness determination. But don't forget, if you had a loan of $2 million or more through the PPP, you will be audited by the SBA, and the SBA has the right to audit any loan, no matter what size. And so that's important to remember at all times. Finally, if you want to get the latest information from the SBA, you simply go to the treasury.gov. You click on the red COVID-19 banner at the top, and it will take you to the page where all the FAQs, the interim final rules are there, the applications are there. It's broken out by sections for borrowers, sections for lenders, and then sections for everyone. And that is how we view it from the lender side. From that, I'm going to turn it over to Mark.
Thanks, Alan. Okay, so I'm going to be talking about really something a bit more from the lender's perspective, but it certainly will be applicable to any of you representing your clients in terms of the forgiveness application process. And what my presentation is going to really focus on is your client is now at the point where they've gone through, for many right now, the 8-week period, and it could be a 24-week period. So what is the next step? The next step obviously is preparing that loan forgiveness application, submitting it to your lender, and then hopefully the lender will determine that there should be full forgiveness of the loan. So your lender has certain responsibilities when they get that loan forgiveness application. And let's just go through a little bit what they're going to get. I mean, basically, it is the loan forgiveness application. There are things that are set out in the interim rules about what should be provided, the PPP loan forgiveness calculations, the worksheet. I think that the entire application certainly should be provided. It will be provided because, and that would include the worksheets, because one of the things the lender is going to have to do, they don't have to independently verify each of the calculations that your clients are doing, but they are going to have to review it and make certain that the calculations were done. And without those worksheets and the additional documentation, that's going to be difficult. And I would expect lenders will request it. And again, I expect your clients will be preparing it. So just be prepared to provide that to the lenders. The lender is going to have to make various confirmations when it submits its decision on loan forgiveness to the SBA. And so I've outlined what these confirmations are. The first one, information submitted accurately reflects the lender's records. That won't be anything perhaps initially that a borrower is going to have to be concerned with, but the lender is going to have to take a look at the information that it collected in its file with regard to this loan and make certain it's consistent with what's being provided. To the extent it's not, the lender may contact the borrower and show what the inconsistency is and then try to correct that. So the lender is also going to have to certify it received the loan forgiveness application, including various certifications that the borrower is making in that application. And there's a listing of the certifications. Won't be anything additional borrower has to do, but the bank is going to want to make certain that the application included those certifications. The loan forgiveness application is fairly specific as to the documentation that's going to have to be included to support the various costs that the borrower spent. So and break down the payroll costs, non-payroll costs, which Alan had described. And then there's the full-time equivalent calculations. And the payroll costs, you're going to be providing, if you're using a payroll service like Paycheck's, ADP, they're going to be reports that's going to contain most of this information. Quite honestly, that's probably the best type of thing if you are using a payroll service provider, is to provide that because it's an independent source. A lender will have to spend less time trying to verify if it's accurate or not. Obviously that, most companies use some variation of that, not all. So again, if you can provide that documentation, less work for a bank to be doing to verify it. And as Alan had mentioned, the applicable costs are going to be those that are actually paid, which would certainly show up on a payroll service provider's report, or those incurred. It's unlike, I don't think any borrower is going to be submitting an application so quickly after the cover period ends that they won't have a payroll report that shows what was actually paid. I suppose if you could have a cost incurred, it hadn't been paid yet, but I'm not anticipating that any borrower is going to submit an application that quickly. You're going to have to also verify that the payroll taxes, again, that should be on a report. Your employee health insurance and retirement benefits, again, document that those were paid. And the loan forgiveness application gives some examples of how you can document it. The best thing is you want that documentation, that supporting information to be complete, because if it's not, the bank may very well ask for additional information. Because again, the bank is going to have to make certifications to the SBA that it has reviewed the documentation, it's complete, and they make a good faith determination that that it was done correctly. You're also going to have to provide backup for the average number of the full-time equivalent employees per month, and that goes into what Alan was talking about in terms of reductions and calculating all of that. Your non-payroll costs, again, the documentation, if you're paying interest on mortgage obligations, again, you're looking at February 15th. Everything had to be in place for the non-payroll costs as of February 15th, so you have to provide some evidence with regard to that. If you do have some type of an amortization schedule, that will probably show payments prior, obviously, to February 15th, which would establish the fact it was in place at February 15th. And then it will also show the payments due after that. And then if you're paying it by wire, whatever evidence you have of payment. Again, it should be 8 weeks, although if you are choosing the 24-week period, then you're going to have more documentation that borrower is going to need to provide. Similar type documentation for rent lease payments. Again, copy of the current lease agreement, which will show it was in place at or before February 15th. And again, verifying your payment. Utility payments, again, similar type documentation. The lender does have an obligation to confirm calculations on the application. So they will go through each of the calculations. They'll take a look at your worksheets and schedule. Keeping in mind that for certain lenders who are processing, who have processed, some have processed hundreds of thousands, there's going to be a certain amount of time that they can realistically spend on each application. But nevertheless, make certain your information is correct and you provide the backup, because the lender has to make confirmations confirming the calculations. They have to confirm the line 10 payroll costs. So again, you've provided, or a borrower has provided, the backup for the payroll costs, and the lender will just have to make certain that that was correctly determined. Right now the loan forgiveness provides for the 75%, as Alan has mentioned. That loan forgiveness application is going to be updated. It perhaps raises a bit of an issue. You probably have some borrowers whose 8-week period, to the extent they received the loan proceeds back in April, they probably do now have an opportunity to submit the loan forgiveness application. Hopefully an updated application will be published shortly, so that won't delay the forgiveness process. And then the lender is going to have to make a certification. It made its decision in accordance with the requirements of Section 2A of the interim final rule, which basically states most of what I just have recited. So the lender's standard of review, again, keeping in mind that there is only so much time that each lender can spend on each of the forgiveness applications. So it's a good faith review performed in a reasonable period of time. And I think if the lender reviews the calculations, makes certain the documentation is complete, that should be sufficient. And again, assuming that the documentation is what they would expect to see. And to the extent if it's from an independent third party, like the payroll reports, they will have to spend less time on it. If it's not from a recognized third party vendor, that may require a little bit more time by a lender. Lenders are not required to independently verify the documentation. They do not need to contact Paychecks to determine if this, in fact, are all of the employees and this is an accurate report. They will largely rely upon what's been provided to them. And then the borrower will have to attest that accurately verified payments for eligible costs as well. So lender has now completed its review and has determined it has all the application. The bank can do really one of two things. As Alan mentioned, the time frame, the 60 days to issue a decision, and then issue the decision to the SBA, and then the SBA has 90 days to review what's been submitted. The lender's decision can be one of really three things, I suppose technically four. It can approve it in whole or in part. It can deny it. It can also deny without prejudice, and that would be because at the time that the application is being submitted, the SBA has decided to independently review, and I'll get into that in a moment or two. So then if there is an independent SBA review going on, it will be denied without prejudice, and the determination will be by the SBA as that review is completed. If there is a denial by lender, and that can be in whole or in part, lender is going to have to notify the SBA that it has determined that the borrower is not entitled to forgiveness in some amount. It has to provide the SBA the reason for the denial. And again, it can go to, in terms of the calculations, whether they agreed or disagreed. Presumably, what the lender is going to do. If there is some discrepancy, they're going to go back to the borrower and try to resolve that, because they don't simply want to deny it, have it go to the SBA, have a borrower possibly appeal. There would just be a lot of really wasted time if they went that route. The lender is going to have to notify the borrower of its denial decision. And then within 30 days of the notice from a lender, the borrower can request the SBA to review the decision. In terms of the SBA, and I'll get into this in a moment, but there isn't that much guidance yet, and there will be, and the interim rule indicated that there is going to be further guidance with regard to the SBA appeal process and what happens when you reach that level. If a lender indicates to the SBA that the borrower is ineligible, which is a different consideration, hopefully that doesn't occur. Hopefully the lender has done whatever due diligence initially, and they wouldn't come to that determination at this fairly late stage. But I suppose if there was some additional information that the borrower was not eligible for the loan, the SBA is going to have to notify the SBA of that fact. And again, if there was the amount claimed or loan forgiveness claimed, if there's a denial, the SBA can require you request additional information. I expect that the banks are going to do this on their own, just so they can have a complete application and a correct one, and give the borrower an opportunity to respond before the denial decision is actually given. The SBA, of course, in this whole process can request information from the borrower independently. Now, separate from this is the SBA can review these loans on their own before an application has submitted, and arguably after an application has been submitted. It's not entirely clear, but the SBA has indicated that a borrower must retain its records for 6 years, which would suggest it would be open to a possible review within a 6-year period. Again, given the nature of certain resources, I would think there would have to be some extenuating circumstance why the loan would be looked at after a forgiveness decision is made. But nevertheless, there is that possibility. So the SBA review, which is set forth in detail in that interim rule, they can review any PPP loan. As Alan indicated, the audit of a loan in excess of $2 million is going to be reviewed by the SBA. Less, that will be at the discretion of the SBA. The SBA will have the ability to take a look at eligibility. And again, the borrower, there's certain eligibility requirements. Ellen had talked about them with affiliation. Confirm if that was correct. If for some reason that wasn't determined correctly, it could be a basis for determining that the loan was ineligible and it will not be forgiven. And that also could create some issues for the bank. So the SBA can look at, again, the representations and warranties, going to eligibility, the correct calculation of your loan amount, the initial calculation, allowable uses, how was it used, the correct calculation of your loan forgiveness amount. If the SBA independently decides to review a file, the lender will be contacted. The lender will have certain obligations. The lender is going to have to notify the borrower within 5 days that the SBA wants to review the file. Then within 5 business days, the bank or lender is going to have to submit to the SBA certain of the documentation it has, in which I've specified: the loan forgiveness application, the transcript of the account, the note evidencing the loan, and any other documents the SBA may want. Throughout this, or at the end of the review process, if the SBA makes a determination that the borrower in fact was ineligible, or the loan amount was ineligible in terms of how it was calculated, or the loan forgiveness amount is not eligible, then the borrower will have certain appeal rights, but those are to be determined, and we are waiting, for a rule that will specify that. Again, we're starting to see, the beginning of the period with the loans that were dispersed in April, and if a borrower did keep that 8-week period, we're starting to see a point where we can start this process of submitting for forgiveness. So some of these things are going to become very relevant to borrowers very quickly. The lender, once it submits its decision, It's also going to request payment of the forgiveness amount. And then the SBA has to submit that payment back to the lender within 90 days. Decision. And that's, and again, we've talked about the 6-year period. As you may know, lenders receive a processing fee based upon the percentage of the loan amount. And, you know, and then for some of these, that's a fairly significant fee. And for many of the lenders, because the interest rate is fairly low, that processing fee is very important. It is possible that if the SBA comes to a determination, actually it probably will, if the loan was ineligible, that the lender won't be eligible for that processing fee. There is a 1-year clawback after the loan was dispersed in which that could happen. So, you know, theoretically, if, you know, depending on when the loan forgiveness application was submitted and the process ends, again, there's going to be a 1-year period in which the lender may have to give up that processing fee. After that, they won't. So presumably a determination after that period of ineligibility, if the SBA reviewed it, it would seem that the lender would not have to give up the fee. Perhaps the most important thing, depending on the size of the loan and the amount of the loan that's not forgiven, to the lender is that it has 100% guarantee of the loan. So if the loan is not repaid, that the lender will be made whole by the SBA, and that will be true even if it was determined the borrower was not eligible, as long as the lender was meeting various rules under the first interim rule and some of the other interim rules. So there are things that lender will have to satisfy to make certain it is entitled to that guarantee, which is very important. That is all I have. And I'm going to introduce Ray Graves from the SBA, who's going to continue the presentation.
All right, great. Hope you guys can hear me. This is Ray Graves with US Small Business. And I want to thank Alan and Mark for carrying the load and doing the heavy lifting on the descriptions of the forgiveness. So thank you guys for doing that. The agency itself has, you know, been telling people that the best way to get information about forgiveness and the applications is to go onto the SBA's website or the Treasury's website to look at the relevant documents. And unfortunately, in most cases, they've told the district offices, which I represent, to avoid trying to provide interpretation, training guidance to folks on an individual level. And I think that's because there is so much changing about this this program. Some of the forgiveness requirements are so detailed. When someone from the SBA is talking, there's of course a logical presumption that whatever we say would be completely accurate and leave nothing to discretion. But in actual fact, you know, what we're seeing in the Cleveland District is that we're not really getting more guidance than what has been posted on the Treasury site, any more guidance than what you all as attorneys are looking at and seeing out there from third-party sites or from looking at the interim final rules yourselves. But I did want to be present here on this program as well, just to offer my feedback as well as my appreciation for all of you who are working with this program. From our perspective at the SBA, it's been an extremely successful program. We have put out there about 4.5 million of these PPP loans, and that is a run rate that is higher and much higher than the SBA has ever done, you know, in a given year for years and years and years, right? So usually we're doing about 50,000 loan approvals per year, and we're at 4.5 million on this one already. And we've been building the program as we've been going along, and we'll be working with this for years to come. So it has been really interesting trying to wrestle this one to the ground. It's a huge task. And we certainly appreciate everything everyone is doing in the field to bring the information out as soon as they can to their clients, whether those are small businesses or whether those are borrowers. I think Alan and Mark did a fantastic job talking about the program. I'm not going to add too much more other than a few pointers, I think, here. You know, first of all, for resources on the CARES Act, my first recommendation is to go to the Treasury's website. And if you Google the CARES Act provides assistance to small businesses, U.S. Treasury, you get there. That is home.treasury.gov/policy issues/cares. And you can find all of the IFRs and all of the court documents there on the Treasury's website. They do a really good job with that. SBA has a mirror website, Paycheck Protection Program at SBA.gov. A lot of the same information is there. For further guidance and for discussion on individual points or individual pain points or questions, although we're not authorized at our district to provide training materials in form of like a PowerPoint or something, we would welcome your call. In many cases, we can research requirements or pass along documents to you. I am Ray Graves. You can reach me at 522-4192 or raymond.graves@sba.gov. If you called our general office number, which is 522-4180, you could ask to talk to Jim or Tim or Tom or Mark, and all of us are there to assist you. A short digression, if your client is looking at the economic injury disaster loan rather than the PPP, we don't have a lot of information on that at our local office as well. In many cases, the best we can do is pass you along to the economic injury disaster loan 800 number, which I'll give you in a second. But if your clients have questions like, hey, how come was my EIDL loan denied, or what's my status of my loan, or I never received my EIDL advance, we got a lot of those questions, more than we do on PPP, and we always direct those to the 800 number, which is 800-659-2955. Again, for economic injury disaster loans, entirely separate from PPP, the number is 800-659-2955. Again, I think the core documents to have in front of you when you're looking at forgiveness for your PPP loan would be the SBA Form 3508, which Alan, sort of talked through, and then what I'm calling Interim Final Rule 14, which was published on May 22nd. We need to expect revisions to that May 22nd Interim Final Rule because of the Flexibility Act, but those are the two documents you would need to have in front of you from our perspective. But the real action here, as far as getting one of these things done, in my opinion, starts way before actually looking at the 3508 forgiveness application. It really starts with collecting the documentation that you're going to need to have all of the information to fill in the document. So just for starters, on your first day swinging at this, put aside the application altogether, or maybe just turn to the very last page, because there's a lot that you're going to have. Employee by employee records for Social Security numbers, cash compensation during the covered period or alternate covered period for payroll. You're going to have employee by employee records of full-time equivalency during the covered period. You're going to have eligible non-cash benefit costs for the covered period or alternate covered period. You're going to have compensation costs for the compensation reference period, which is generally the first quarter of 2020. You're going to have documentation of FTEs for the selected reference period. So the compensation has one reference period, but FTEs, just in terms of head count, that has a different reference period, which you can select. And then turning to non-payroll costs, like rent, interest, utilities, payroll, or non-payroll, that is, rent, interest, and utilities. You're going to have information for when that was incurred, when it was paid, for the covered period, or perhaps for times outside of the covered period. And you're going to have evidence that all of these things were for obligations that you already had going into the crisis. So it can't be something that you just got. It'd have to be a lease agreement from prior to February 2020, or a loan that you had prior to 2020, et cetera. So you'll have to have FTE reduction information for certain periods. And there's certain safe harbor periods that you'll have to kind of know what your FTEs are at. Records for employees refusing to come back to work, any firings you might have during the period, requests for work terminations, voluntary resignations. So before you even get to the worksheets and get to the schedules, make sure that you've invested a lot of time in just gathering the information, and you have some kind of flexible reporting where you can get this kind of information going forward. It will make your life much easier. My last bit of advice here is when you're looking at that, when you finally get that information, you've got it in your hands, and you're looking at the form, it really does need to kind of be read backwards to forwards. Page 10 of the SBA Form 3508 forgiveness application, page 10 summarizes all the documents you're going to need. So you look at that first. And then there's a scheduling worksheet on page 9, and that's the first thing that you fill out. That's where you're filling in employee by employee and talking about whether or not that individual employee may have had a reduction in their hourly rate or annual salary that you're going to need to make note of to see whether that's going to cause your forgiveness to be reduced for some reason. You don't want to do that. You want to hire people back at the same rates that they had prior to the crisis. But you're going to fill that out. There's a separate section there to fill in employee by employee, folks that are higher paid employees that had $100,000 or more compensation periods last year. From there, you're going to use that information to fill in page 6, which is the Schedule A, not to be confused with the Schedule A worksheet. There's on page 6 an actual Schedule A, which the worksheet populates. And then finally on page 3, the information from Schedule A populates into the actual calculation form on page 3. Once you have the information, I think going through and actually filling out the information in these forms won't be as hard. But the key is to start off with all of those periods of information and the ability to enter that stuff on the worksheets and follow it through. Those are my recommendations or my suggestions to you. And with that, I guess I'll turn it back over to Carrie to see if we can run through our list of pre-prepared questions or any other questions that we might have from our chat.
Yeah, thank you guys so much. That was a lot of great, useful information. And with that, the first question I got was, can you make your PowerPoints available? Yes, great. Okay, so I'll get them from you and we'll be able to send those out to everyone because they were just so full of great information. We can definitely go through the list of prepared questions. I don't think we got one on self-employed individuals. Alan, do you just want to shout that out to the group in case they didn't see it in the chat? How do self-employed individuals document the use of the PPP funds for payroll?
Right. For self-employed individuals, that's meaning you have a Schedule C. It's a very mechanical calculation. You simply divide your net income from the prior year by 852s, or maxing that out at $15,385 per individual. So you're not actually showing it applied to a compensation category, but because you're the self-employed and deemed to be the owner, you're deemed to have been paying yourself. And we assume for the time being, until we've seen the actual revised application form, loan application form for forgiveness, we don't know if that adjustment, that calculation will be adjusted, but it is simply a mechanical calculation.
Great. And Ray, and Alan, I'm going to defer to you. Is there one of these questions you think that is most helpful to end with today, or any parting words? Because we really only have like a minute and a half left. So any final thoughts from anyone? Or Mark?
I'll let Alan handle that. You led off, so I'll let you finish up.
One of the things that we often get the question of is, well, if I don't apply for loan forgiveness, can I just repay my loan at 1% over the next 2 years or 5 years or whatever the number is? And we believe that you really need to use the loan for the proper purposes. In the loan application that you signed when you applied, or your client signed when they applied for their loan, you said you would use this for payroll retention and employee retention and for the permitted eligible costs, and that you would use it all within the rules of the PPP. And so the SBA expects you to apply for loan forgiveness. And so to the best extent that you can possibly do so, you should use the loans for the payroll costs that are eligible and the non-payroll costs that are eligible, and apply for loan forgiveness so that you're actually in compliance with the certifications you made upfront on your loan.
I agree with Alan. I don't think you want to do anything that will raise a red flag, and I think not applying for forgiveness at all probably raises some type of a red flag, especially if you're eligible for forgiveness, which you should be to some extent.
And your forgiveness will just be reduced, as I understand it, and not completely denied if you didn't make the 60-40 splits, for example. That being said, from what I can tell, the rules are that you are supposed to, thou shalt, use the use of proceeds for 60% payroll and 40% other eligible costs. Failing that, though, will reduce your forgiveness. I don't think it's going to cause you any kind of additional troubles with SBA. It's been said to me many times, we're not trying to have a gotcha program where we're messing with people just because they're trying to comply and they weren't able to for some reason. But people are advised to try to follow the rules as much as they possibly can. Certainly shouldn't be going out and using the loan to refinance something or buy a new piece of equipment or something when those are clearly not eligible uses of proceeds.
Great. Well, it's 1 o'clock on the dot. Thank you so much to Mark, Alan, and Ray. This was extremely informative and helpful. And like I said, changing by the day, so stay tuned. We'll get that information out to all of our attendees today. And with that, I'm going to close the webinar. Thank you guys so much. Stay safe. Have a good afternoon.
Thank you.
Thank you.